What's going on, fellow grinders? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Tonight's video is of critical importance, and I know so many people put critical or important in all of their videos. I swear this video will be worth its weight in gold to you. Please stick around, watch this video, because the market is on a razor's edge right now, and it could go in either direction, and I will show you why I believe it will get pushed into one particular direction. Stay tuned, guys. Like I said, there's a ton to go over. Alright, everybody, we know the drill. I'm not a financial advisor. This is not financial advice. I simply share my technical analysis. You use it as you see fit, but remember, you manage your own money and you manage your own risk. With that being said, if you like this video, please hit the like button, subscribe to the channel, share it with their friends. Let them be in the know. Be a grinder. Let them be grinders too. So we're going to hop into one of the most important things that's going to go on tomorrow. Tomorrow, the GDP report comes out. If the Q2 GDP report is negative this week, is it really a recession? By the technical term, 2 consecutive quarters of GDP shrinkage is a recession. Now, currently, the quarterly GDP growth is projected to be negative 1.6, and last quarter, Q1, it was negative 1.4. So by this projection, it would put us into a technical recession. Now, the White House, the Treasurer, they're not going to admit it. They're not going to admit that there's a recession. They won't even admit that we are in a market decline. They think the economy is perfect right now. Anybody who is in the economy currently, who is actually spending money that they work for and has a less than 7-figure income, or doesn't have a 110% ROI on their investments like Nancy Pelosi, you guys know that the economy right now is tough. Groceries are more expensive, gas is more expensive, everything is more expensive. So we're looking at the potential of actually being in a real recession, a technical recession, and that could spook the market. That also leads me to the housing, hundreds and hundreds of people being laid off in the housing market. Loan writers, underwriters, people, loan managers, real estate agents, lots of layoffs in the housing market. The housing market is starting to show the cracks in the foundation, and it's starting to collapse. And when the housing market goes down, the economy and the markets will have a hit with it. Also, we have tech market layoffs. This is as of July, so as of the start of this month, but there's been 30,000 US tech workers who have been laid off. The tech markets got hit very hard, and they had a nice bump today, but I don't see the bump today being anything sustainable. And as this video goes on, you'll see why I believe that the market is going to reject off of its current trend line and continue to the downside. There's a lot more negative news and a lot more negative actual earnings and revenues, and the prices have been going up. The stocks have been going up recently, and I've never seen this before. I've never seen something where Google missed earnings per share by 4.42%, and it missed revenue by $113 million, and it has a 7% bump the next day. Microsoft, on its earnings report, missed by 2.72 earnings per share, missed by $519 million in the quarter. Admittedly, out of 52 billion, it's not nearly that much, but also revenue and earnings have already been tempered. The expectations have been tempered already. Lots of companies have already said expect lower returns, and they're still missing those numbers, which is huge. But look, I mean, $519 million missed their target. Meta, they had their earnings report come out today, and they had a little bit of a downturn on the after hours, but not much. 3.4% miss on earnings per share, $86 million miss on the revenue. These misses aren't just going to go away. They're not going to go away. I'm trying to find the one where, oh yeah, earnings here. I think price dropped by there was a massive price drop on an earnings call for Facebook. I don't recall where it was at. But tomorrow, Apple has its earnings. We'll see what Apple does. And Amazon earnings tomorrow. Walmart has already announced, you see the big decline here, this big gap down that got filled today pretty much But that big 7% gap was because they essentially said, we're not going to hit our numbers. We're not going to hit. Revenue is bad. Inflation's bad. We're not getting the money. We're not getting the customers. We're just not hitting our targets. To me, this all looks like market manipulation to get exit liquidity. And I'm not trying to be that guy, but it looks like pumping up to get exit liquidity so people can get out, so big market makers can get out. Today, that rise today in the Nasdaq rose over 4%, 514 points. But it wicked off of the trend line, this long-term trend line. This is the edge of the blade I'm talking about. Break above this trend line, retest it, make that be support, and then the Nasdaq can go up, and we could be out of this bear market. Quite literally could be out of the bear market within the next couple of days if we can break this trend line. I don't see it happening. There are just way too many negatives still in the market. There's still way too many negatives. Earnings aren't hitting. Revenue is not hitting. Inflation is still high. Consumer confidence is still low. And we may actually be in a literal technical recession come tomorrow. I don't see us breaking out of the bear market. I don't see us getting into a recession and breaking the bear market at the same time. Now, what you guys are really here to see, Bitcoin, Ethereum, MATIC, the coins that we follow, has been actually, I messed this up last time. My trend line was way too sharp to the upside. That broke down. I did get a decent short out of this, but again, Bitcoin came very close to that downward trend line, and I actually do expect a rejection. When CPI data came out, that was this little run below the trend line. That was the only time it got below the trend line, but I did want to make sure to note that the trend line was still valid. It was just the CPI data coming out at 9.1%. Kind of made this take a deep dump for a few minutes. But Bitcoin, again, is also very much right on the edge of the trend line. Ethereum wicked to and above the trend line for a second. I don't want to say a second, for an hour or two, it wicked above. Now it's coming back down below. I wouldn't be surprised to see this make an evening star pattern and come down. Now where we're at, there's not much more room to go. There's not much more room to go in this holding pattern. We're going to break the resistance, but we're going to break the support. And if we break the support, it's going to look something like this. We will get another big rejection down. We will get another huge move to the downside. If we break the resistance, then we could get on a nice long run. There could be a run. I'm not going to deny the fact that it could happen. I'm not going to deny the fact that we could start at least even a small bull run. I don't believe that it's going to be a full-on bull market and we're going to go start to see all-time highs. I don't believe that to be the case at all. But I'm not going to deny the possibility that we break this trend line. We go up a little bit, get a nice like relief rally up to like 26, 27K, maybe even 28 before falling back down. It's possible. But right now, everything to me is leading to more down pressure. MATIC, another one. MATIC has tested the trend line yet again and has rejected off of the trend line. If this trend line rejects on the Nasdaq, on Bitcoin, on Ethereum, on MATIC, on every major player in the crypto space, in the Nasdaq, expect pain. Expect a big run to the downside, potentially hitting a lower low. For Bitcoin, that may actually be touching 14 to 15,000. For Ethereum, it would be sub $900. For MATIC, it would be sub 35 cents. And for each of your own, coins that you follow individually, you would want to take a look into where that could be. But guys, this is critically important. Please make sure that if you enter these markets, that you do your research, that you know where you're at, as opposed or in conjunction with trend lines and where the market is moving. You don't want to go against the Fed. You don't want to go against the trend. Those are just trading no-nos. So with that being said, guys, I hope you enjoyed. As always, until next time, peace.